Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Monday, December 22nd. We've got a shortened holiday week. We've got some football on in the middle of the afternoons this week, so potentially a quiet week, but still, some of these markets are setting up at some pretty important inflection points, so there is a potential for some surprises. A little bit of a Santa Claus rally to kick things off this week in the grains and the livestock. As usual, we'll get things started with the March corn contract pulled up here. So March futures up 3 1/4 cents. 447 and closing above the 200-day moving average. Why is that important? Well, we haven't seen consecutive closes above the 200-day moving average since all the way back to June. We've closed out above it a handful of times over the last month and a half, but the following day lacked any follow through and we kind of fell right on our face. So I think tomorrow's trade could be very important, not just for the rest of the week, but for the rest of the year and potentially turning that calendar over. If we get consecutive closes out above the 200-day moving average, potentially that spurs some momentum traders to jump on board and we can get out above these November highs, which come in 456, 457 above that, and you probably got a little bit of runway to turn this into a more meaningful rally. Until then, mostly range bound, but on the verge of a potential breakout if we can see follow through. So follow through going to be very important for this corn market and the corn bulls out there. Now, on the soybean side of things, a little bit of relief today. Nothing to write home about. Jan beans up 4 cents, 10.52 3/4. March soybeans up 5 1/2, 10.64 1/4. And relief after such a big sell-off, not out of the question. You could make the argument that today's relief or dead cat bounce was very underwhelming, considering where we came from. And we had the RSI at the most oversold levels of the year. So again, relief not totally unexpected. We failed to get out above the 200-day moving average. If the bulls can find their footing here and carve out a little bit of a low, potentially we go back and retest this 100-day moving average near 1082. If you recall from prior videos, we've outlined this as an important pocket area. This was the old gap from October 27th. So if we can carve out a short-term low, you could be looking at some short-term relief up into the mid-1070s to that 1082 level. So that's what we're looking at for soybeans. Failure to find their footing and a break and close below Friday's low. And again, you've got more downside risk to these lows from October and potentially back to August. So a lot of market participants obviously keeping a close eye on South American weather, which has been fairly favorable. We did get a flash sale of soybeans to China again, which is great, but the market's telling us we want to see bigger quantities and certainly more frequent purchases as well going forward. So those are going to be key catalysts and key price components going into the new year. Now, over on the wheat side of things, again, a little bit of strength today, but the bulls have their work cut out for them. It has just been an ugly, ugly chart for the last several months. To get the charts kind of back in favor, we need to see consecutive closes back above the breakdown point. That comes in the mid-520s. That comes in with a bunch of moving averages as well. You've got the 20-day, this purple, the red line is the 50 and the 100 there. So 1025, 1030, or I'm sorry, 525, 535. There's a boatload of technical resistance. If we can get out above there, that would be the inflection point that really turns the tide. Until then, the bear is still in pretty clear control of the technical landscape. Now, quickly over to the livestock side of things, just been treading sideways. We had the cattle on feed report at the end of last week. It was neutral to bullish. We had a stronger open, but that was sold into after we weren't really able to gain any meaningful ground above the 100-day moving average and resistance, which you can see here really comes in from this gap from October 27th. So a bit of a brick wall here. Wouldn't be surprised to see that continue to hold. The cash market has been, fairly firm, but we wouldn't be surprised to see that stall out as well. So I think the upside here in live cattle somewhat limited. So if you're a hedger looking for protection, this might not be a bad opportunity to take action. We've been in the camp really since the better part of the last month that we're going to trade sideways into the end of the year, and that certainly played out over the last couple of weeks as we've seen volatility subside and average daily ranges come in as well. Now, over on the feeder cattle side of things, you can make the case that there is more upward momentum. We talked about this in our interview with RFD TV this morning. The feeder cattle index still quite a ways above where futures are, so potentially a tailwind there for the feeder cattle market. But ultimately, like live cattle, we think that we can come into a little bit more of a trading range and see that volatility continue to leak out into the end of the year. So what that means is if you're trading options, you don't necessarily want to be long volatility if you think volatility is going to come in. So keep that in mind, especially if you're a hedger. Sideways seems to be the path of least resistance here into the end of the year. Obviously, things can change very quickly, but as of right now, that is the way things are unfolding. And last but certainly not least, one of our favorite markets as of late, lean hogs. We've got the April lean hog contract pulled up here. Nice recovery on Friday's session. Got back above the 100-day moving average, and today's close, a new high close for the move, which potentially puts us on the verge of a breakout. If we can get out above this 90 to 90.50 level, I think there's more upside momentum. Draw that out so you can see exactly what we're looking at. This is a huge level all the way back to the fall. The fall breakout point, a little bit of support, and the breakdown point. So a big inflection point for the market. If we can get out above 90.50, I think there could be room to run for this April lean hog market. Again, futures and options does involve substantial risk of loss and is not suitable for all investors. If you do have any questions with regards to any of these markets or other markets, do not hesitate to reach out. If you want to try a demo of our trading platform, head over to bluelinefutures.com. Thank you very much. Probably see you Wednesday for a brief video as well. And if I don't, hope you all have a Merry Christmas.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.